Welcome to this video. Today I'm going to be making a stock analysis on APPlovin Corporation. Now, if you like this video, please don't forget to like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, what is APPlovin? Well, APPlovin, they make ads for games and they help push ads for games and they contact creators or publishers of games and as well as being contacted and push them. So if you've ever wondered while you're playing Subway Surfers or whatever, who makes the ads and who makes money on the ads, well, that is AppLovin. That is their entire business model, and that is why I like them quite a lot, to be honest. Now, as you can see, currently we are trading quite high compared to earlier this year and the end of last year. As you can see, then we were trading all the way down here in $34, and it has increased rapidly ever since. As you can also see, we have all of these green E's down here, and as well as this one where you can see they surprise with their earnings time and time again, as well as here where they're up by 38%. So as you can see, they're more often than not, they're surprised by quite a lot. Now, I don't really like that, and the reason for that is because this means they're just poor at guidance. To be honest, of course, they might be making more money than anticipated, but chances are that you're gonna surprise by this much every single time is purely just unrealistic, and I think it's poor business practices to surprise by that much. Now, some companies does that where they say, okay, we're expecting to make, let's say, $1 for each share, and then they make $1.06. But here, as you can see, it is completely not realistic what they're reporting and what the estimates are. So that I don't like about them. But besides that, it is a great stock, as you can see. Now, it is just trading upwards and upwards and upwards. We have had a huge increase ever since 23. So anyone who bought here has made an insane amounts of profit. Now, there is a bit of a problem right now with this. As you can see, it spiked up at 500, where it tanked quite sharply. And that's because there has been some scrutiny because some companies are accusing them of unethical business practices regarding to their apps. So that is why it's quite volatile at the moment. Now, however, we can still see that they are making a golden cross today. As you can see, we have this yellow bar right here, which means that the short-term momentum is greater than the long-term momentum currently, so it is trading upwards. Now, however, I do think the company is a bit overvaluated. Of course, it is a great company, as you can see, but I don't think it's justified that within 3 years, you 3,000% almost your price, because it's just ads. They didn't invent the cure for cancer, they're just making ads. So I don't really like how much they're priced at the moment, and I think it's a bit too crazy, but that is of course my opinion. I do like the company, but I do think they are a bit overpriced. However, as you can see, it is just insane how highly they're priced. You can also just see they keep trading here in the upper RSI. Of course, if something is above 50 but below 70, it means it is in the upwards channel, and if something is above 30 and below 50, it is in the lower channel. So currently we are trading a lot in the upper channel, and we also see a lot of spikes up here in the upper RSI, which means the stock is being overbought. Now, as you can see, we do have earnings today. Have they been released? They have not been released yet. As you can see, this is the estimated $1.44 per share, a bit more than last time where they reported $1.73 earnings per share. So chances are we're gonna see them surprise that again. Now we do see the stock is falling 2.2% today. So let's see after earnings, which will become coming after market close. Now, as you can see, however, they are increasing their earnings more and more in tow, as you can see, which of course is also why they are increasing. The stock price has increased because they make more and more money. But as you can see down here, they are making great money, but they aren't making enough money to be a $100 billion valued company. So I think it's a bit too overvalued at the moment. However, they don't pay any dividends, as you can see here, and they never have, so we can't really speculate on that. If you look here on their annuals, as you can see, this is how they make money. Consumer revenue and business revenue was early, and then they started advertising apps, and this is when this stock just absolutely skyrocketed. So it is quite crazy. You can also see just how much of the revenue is in the United States and the UK, and then the rest of the world here. So if we take the UK and the US together, as you can see, that is over half of their revenue. Actually, just the US alone is almost half the revenue. So quite interesting. But they are increasing their revenue and their net income more and more. So that of course is great. If they can keep on pushing margins like this at 33%, I would say it is fairly evaluated, but we don't really have enough, where'd it go? There it is. Years to say, okay, it's great enough, as we did see these years prior where they don't make any actual money, and then we had 23, which was the first year they made real money. Now, if you look at the seasonals in this stock, as you can see, it was first publicly traded in 21. As you can see, we've had some years that are quite crazy, just like last year, where this one was up by 735%, and the year before, where it was up by 271%. So yeah, some years we have, and then we had a huge loss in 22, which was really insane. As you can see, down by 90% almost. That is, of course, also why it traded up that high in 23 and in 24, because it really it fell so much in 22. However, it was on the backbone of a almost 50% rise at 44% on the first year it was being traded. So quite volatile stock, as you can see here in the seasonal gains on it. Now, in the technicals here for the day, it is a buy, and for the month, it is a strong buy. And that is, of course, because if we look at the stock here, as you can see, get away ads. As you can see here, it is increasing, even though it is a bit volatile. We are seeing a slow increase now, and we currently have a golden cross, as well as we are trading nicely in the RSI. Of course, we are not up here, which is great, and we're not down here, which is great. We're just sitting comfortably in the middle of the RSI, which means that the chances of upwards momentum is still here as it is. So it is quite a good time to buy in if you're buying on the technicals alone, as we currently are also trading just above a support level right here, and we just came back from a support level down here. Now the next place we're gonna have to break through to get another, if we're gonna break through a support level, that is gonna have to be right here, just at around 340, so about 50 bucks from where we're trading currently. Then of course we also have to break through this about 500, but let's just wait and see if we even break through this first one. Now, on the analyst rating on this, as you can see, they are also very, very high. We have 31 analyst rating on it. As you can see, we have 20 strong buy, 4 buy, 5 hold, 1 sell, and 1 strong sell. So a lot of different analysts. Some say we should buy by 117%, some say we should buy by 15%, some down by 30%. Do I think it is that all the analysts are wrong? No, I don't. But I do think this would be more fairly priced at $200 than the 300. So I do think it is a hold. If you bought it down here, if you're lucky enough to have bought it down here, I would get out of this stock immediately, to be honest, because I don't think it chances of a correction in this stock coming is quite great, just given the fact that how highly we are trading. I'm not saying this is in a bubble, but is a case is great for it, because often we see bubbles when a stock really can't get expensive enough. If you say, well, I don't know what the roof for the stock is, that probably means the roof has already been hit and it's time to get out. That is at least my opinion. But we do have analyst rating all over the place, which is quite great, because this means we have a lot of different opinions on it. We do have many strong buy, but however, you need to know that many analysts more often than not have a positive side on a stock rather than a negative. So you can go look at many stocks. Chances are you are gonna see most are gonna be a buy or a strong buy or a hold, and we rarely see many in strong sell and sells, because it just doesn't happen that often, and that is purely psychological. We can also see, however, in the earnings, as you can see, they are making more and more and better and better and better money. But for me, I just think it's a bit overvaluated, given it's just an ad company. So that is simply why. If they made anything else, well, maybe it would make sense, but the valuation is a bit wrong. But I do like the company. If they can actually hit this in 25, I might buy in, because then chances are they also might deliver in 26, 27, and 28, and so on and so forth. That is my only thing about this company I don't like, is how highly it is priced at the moment. So personally, I would say hold if you own it at a price point that is relatively close to where we are currently. But if you got in early and have a shit ton of profit, I would get out immediately. That was my stock analysis on APPlovin Corporation. Now, if you did like this video, please don't forget to leave a like and subscribe.